Now we shall try to understand what made it necessary to bring GST and replace the earlier indirect tax regime. What were the issues with the earlier taxation system? First, multiplicity of taxes. Earlier there were multiple tax structures of center and state taxes like the sales tax, service tax, central excise duty, additional customs duty, state level value added tax and octroi or the entry tax. All these taxes were subsumed under the GST. Second, cascading effect. Let's understand this with an example of pre-GST era. T-shirt manufacturer purchased raw materials to produce T-shirts. In doing so, he had to pay VAT. When T-shirts are produced and sold to the wholesaler, he had to pay an excise duty. When the wholesaler sold the T-shirts to the retailers, he paid VAT. And finally, when retailer sold the T-shirt to the consumer, he had to pay sales tax. Now at each stage, some value is added to the product. So taxing at every stage is fair. But the problem arises when at every stage the price of the product includes the tax paid at an earlier stage. So the consumer didn't just pay on the final value of the T-shirt, but he paid tax on amount which included taxes paid at an earlier stage. This gives rise to tax on tax, and effectively the final price of the product is increased. This is called as the cascading effect. GST solves this problem by allowing easy input credit mechanism. Third, inefficient and non-transparent system. Issues like undertaxation, overtaxation, or non-taxation were prevalent. Failure to tax all goods and services had a distortion effect on consumption decisions and price signals. GST focuses on rationalization of taxation. Fourth, separate taxation of goods and services. It required splitting of transaction values separately into goods and services, leading to complexities and increase in compliance costs. Globalizing Indian economy. India has signed free trade agreements with various countries which allows duty-free or low tariff imports in India. A uniform tax system will enable Indian industry to compete not only internationally but also in the domestic market. Change in government of a state often causes change in tax rates in the respective state. Thus, with the introduction of GST as one nation one tax, it greatly reduces these fluctuations in prices. Violation of destination principle. The destination principle is a concept of international taxation which allows for value-added taxes to be retained by the country where the taxed product is being sold. Various foreign-based companies took undue advantage and placed their products at a cheaper price in India. It affected the cost competitiveness of the local producers. GST uses the destination principle, so tax collected from products sold in India is retained by India. Now, all the above points and lack of transparency and complexities, the cost of doing business increased in India. So GST has helped to ease the doing business in India.